Are you explaining the reverse mortgage occupancy requirements correctly? If you think you are, you're going to want to stick around and watch our interview today with Dan Hultuqist. Welcome to the Industry Leader Update. Today we have a real treat for you. We have Dan Hultuqist, the author of Understanding Reverse. Perhaps you've heard of that book. I'd recommend you read it. And he is also the National Sales Training Specialist for Fairway Independent Mortgage. Dan, thank you for joining us today.
Pleasure to be here.
We are in the midst of a discussion that we saw an article in Reverse Mortgage Daily regarding the occupancy requirements. Now, for myself as an originator for years, I do the 6-month and 12-month requirements, and the article really intrigued me as far as if we're really telling people the accurate information. But before we dive into that, let me ask you, what is it that got you to even investigate occupancy requirements in the first place?
I think it's in part that we see advertising and we see guidelines, we see even information coming from some of our regulators where it doesn't quite jive with the regs. And that's usually where it kind of stands out like a sore thumb.
So can you give us some examples of what you've seen that said you went, whoa, wait a minute, I need to check this out?
Yeah, we see from time to time that the loan's going to mature if a borrower is out of their home for non-medical reasons for 6 consecutive months. There is no such regulation, but there is a 2-month rule and there's a 12-month rule that probably needs to be clarified.
So it's almost like a well-established legend per se, right? It's passed on from generation to generation as an oral tradition. So let's say, and this is one of the examples I saw in the Reverse Mortgage Daily article I thought was good. Let's say I'm going to go on a mission for 9 months because I'm part of the Church of Latter-day Saints or the Mormon Church, and this is something I've always wanted to do. I'm retired, and my wife and I are going to go and serve for 9 months. Would that trigger a repayment?
It's a really big issue for those. We do a lot of business in Utah and Idaho, and so we've been hearing from some of our loan originators and branch managers that that's a problem. But the problem is that we're not using the correct definition of principal residence. HUD defines principal residence as and I'm going to read this for you, the dwelling where the borrower and, if applicable, non-borrowing spouse maintain their permanent place of abode and typically spend the majority of the calendar year. So when I wrote the article, I kind of made the case that a single year occupancy that's not typical is irrelevant. Can you go on a 6, 9, 12, or even an 18-month mission trip and still maintain a principal residence? Yes, you can, but there's some guidelines you better follow because you're kind of walking into some dangerous territory.
So let's say I'm not a particularly religious or devout person, and my wife and I, we're going to go on a world cruise. So we're going to be gone for 8 months. What should we do, and what should a homeowner and their spouse do before they go on that 8-month world cruise?
Yeah, I put some guidelines together in the article, and I'm just looking at it right now. The first thing you want to do is communicate with the servicer the moment you have plans to leave the home for 2 consecutive months. And so HUD 4330, that is the servicing handbook, does require that borrowers reach out to their servicer and notify them if they're going to be out of the house for 2 months. And that's something we often don't tell our clients.
If I'm the homeowner, to find my servicer, am I looking at my reverse mortgage statement I'm getting each month, and that's the person I call?
Yes, reach out to your servicer on your servicing statement. But it's not just world travelers or members of the Church of Jesus Christ of Latter-day Saints. Those who want to serve on humanitarian missions, snowbirds are concerned, right? So we see a lot of snowbirds. And then we also find that people who like to travel in recreational vehicles, well, they're going to be out of the home in many cases for more than 2 months. They need to be informed that they have a responsibility to reach out to their servicer and let them know they're going to be out of the house.
So here's a scenario. I'm a snowbird. I'm going down to Arizona because it's just too cold up in Maine, right? So the winters are brutal. I'm giving my servicer a notice as soon as I know I'm going to be going on that trip. And during that time frame, the certification of occupancy comes, or will it? Because I've notified my servicer. I've done what I'm supposed to do as a reverse mortgage borrower. What happens with that certificate of occupancy verification?
That's a great question. And, the HECM program does allow for the occupancy certificate to be forwarded in many cases. You just need to communicate with your servicer that you're going to be out of town. I would make sure you write a letter of explanation. I actually give a 7 levels of communication, really, that you would want to go through with your servicer to make sure that nothing bad happens to the loan.
So we're going to include a link, Dan, to your 7 points that a homeowner would want to do in their letter of explanation. So our viewers and reverse mortgage professionals can perhaps share that with their previous clients. Now, we're looking at this big view, so we're almost taking a gasp as an industry, like, oh my goodness, maybe we haven't been telling people the right thing. What are the consequences of that?
Well, the first problem that we're seeing as originators is people aren't getting a reverse mortgage when they should. Okay, but if they do get a reverse mortgage and they don't follow these practices, well, the servicer could accelerate that loan. And it's not just 6 months or 12 months. If the lender determines that the home is abandoned or vacated, well, then it could actually happen much faster.
If we're looking into the future, how do we talk to somebody about, because we have unexpected emergencies, especially as we get older. Let's say they have a stroke and they have to go into a recovery. We've got a recovery hospital here that does long-term care in our town. So let's say I'm out for a good 12, 18 months. What happens in that case?
Right. At that 12-month mark, that's considered vacating the property if it's for mental or physical illness. So several times in the regs, we see the phrase mental or physical illness. 12 consecutive months would cause the loan to mature. Now, there is a caveat there. HUD 4330 does allow for an exception if you get a doctor's letter at the 12-month mark saying that within the next 2 months you can return to the home. Then the servicer is most likely going to extend that from 12 months to 14 months. But if you're in assisted living or a nursing home, that's problematic. Now, there's another caveat. If there is a non-borrowing spouse living in the home, you may remember this past May, HUD changed the regulations to allow death or incapacity of the last borrower. Death or incapacity can protect the non-borrowing spouse. So now we don't necessarily have to worry about putting a spouse in a nursing home for 12 consecutive months. The non-borrowing spouse still may be able to occupy the home.
And kudos for that change, to HUD, because that's a much more liberal and generous interpretation, which does protect a non-borrowing spouse probably at one of the most stressful points of their life.
It's an outstanding regulatory change, and we can go back to May. There were 2 changes to the non-borrowing spouse guidelines that are very favorable.
Anything else about the non-borrowing spouse that we need to know? I can't see him, Dan, but I can almost picture people just shaking their heads going, wow. Anything else you want to share with us before we conclude today?
There are some critical elements to the reverse mortgage regulations that we probably need to go into a deeper explanation with the client. There's a lot of times where we simplify the guidelines because it's probably not going to be an issue, right? There are other times when something like an occupancy requirement, especially for someone who's 62 and likes to travel or wants to go on a humanitarian missions work, my parents did it, right? They spent some time overseas because they found that retirement was boring for them. Yeah. So they're going to go volunteer their time, right? And if my parents had had a reverse mortgage at that age, would the loan have matured? I think it would have, simply because we're not on the same page as what's the definition of principal residence.
Thank you so much, Dan. We really appreciate it. I'm going to include a link with your email address, so if folks have questions, they can reach out to you at Understanding Reverse, and also the information letter that tells you what you should include in the explanation of the servicer. So thank you for providing that. I'm just wondering, what's going to be the next aha moment for our industry? This is a big one when it comes to occupancy. Really appreciate it. I think this opens some doors for the younger homeowner, in their early 60s, who maybe has been reluctant because they thought the occupancy requirements are much more onerous than they really were not. So thanks again, Dan.
Thank you, Shannon.